Hello friends, welcome back to another video. Today we are going to be talking about price patterns and specifically talking about double bottoms and double tops. Sometimes people call these W and M's or M's and W's. There's all sorts of different names for it, but in today's video my goal is to talk to you a little bit about these double top, double bottom sort of scenarios and how to properly approach trading them, at least according to my opinion here. So what I'm going to do here is I'm actually going to just scroll up a little bit. We'll make some room just to talk about this for a moment. So let's first identify what kind of pattern we're actually talking about, and then maybe think about some of the ways to actually approach it. Okay, so let's say you have a market going along. As we know, most of the time the markets, if they are trending, they're trending in waves. We know that, we have situations where you have, an impulsive move to the upside, and then you have a corrective move, and then an impulsive move again, and then a corrective move. And what the market is doing in this situation is it is sort of like reloading, right? It's kind of like, or breathing in or breathing out. That's another way of saying it, right? You get the situation where the market is breathing in, it's breathing out, it's breathing in, it's breathing out, it's breathing out, and you see the point here is that with any good trend, it usually doesn't just go screaming to the upside forever. Usually we see a trend sort of forming these movements, higher lows, higher highs. And you often hear that on YouTube. You hear this concept of higher lows and higher highs, right? Just showing that there is a structure to the market that looks very bullish. If we were looking at one that was the opposite, obviously, we would just draw it like this, right? Or we would look for charts that look like this, in which case now you see we have lower lows and lower highs, right? So the lower highs here, and what we're identifying here is a general supply in this market. You're seeing a lot more sellers who are lining up and selling this thing down and down and down. Well, today's pattern is going to be talking about something that sort of breaks up this concept. Let's say, again, we are expecting these lower lows here, lower lows, right? Let's say we're looking at that. And we are sort of watching price action form here. Of course, we've got another lower low there. And then we see something like this. We see price come up and then we see price come back. But this time we're watching it and we don't see a lower low. We in fact actually see a bounce at the exact same general area. What does this tell us? Just from before we talk about trading this pattern, what does this kind of tell us about market demand or market supply? Again, remember that we are talking about a market where we're saying, hey, each time price rallies, it's able to sell lower, and each time it goes down, it's breaking the lows and showing that there's a lot of sellers in this market. Well, that's sort of contradictory when we talk about this, where you see, yes, we've been making those lower lows, but now we're not. Now we're finding an area where buyers are tentatively looking for a reversal. They're looking to buy this market. And that's the first thing I want to make clear when talking about double tops and double bottoms, is it is simply a observation by you and probably by lots of other traders who are watching the price action of any market, whether you're looking at gold, the S&P, currency pairs, right? Whatever you're looking at. If you see something like a double bottom, the significance there is that it is breaking the pattern of lower lows and lower highs. We're seeing an obstruction to that concept. So when you see this, is it time to just buy it right away? How do you know how to get in? It's great that you've identified this concept of, hey, price seems to be holding here, but how are you actually able to get in? Do we buy here? How do we know that that's the bottom? Do we buy here? Do we buy here? Where do we actually look for an execution? So let me draw this a little bit cleaner. I'll start fresh just so we can get this idea. So again, let's take the example of a double bottom, right? So you have price coming down and then we see something like this. So where do we actually get in? How do you know that this is the bottom? Well, the truth is you really don't. You don't know that this is the bottom until you see some form of evidence. Like we just said, we're looking for a situation like this. Then what we're looking for, at least what I would say is the best way to approach this, is let's watch for that pattern to not only just be broken on the lower high concept, but let's look for the lower high concept to also be prevalent. So in this case, we know that the lower low idea is sort of compromised, but we still haven't seen, a higher high, right? And that is sort of what to me is most important, as well as, seeing this form of, support at the bottom, but then let's wait and see if we can get something like this. Check this out. Price breaks out and now is trading above the previous high. Now things get very interesting. Because now, in my opinion, this is more of a confirmed or a stronger bounce or double bottom potential. Because what you have here is you have an area where, okay, buyer stepped in again at the same level, and even were able to, again, break the pattern of a lower high here. That's going to be a very, very important component to trading the concept of a double top or double bottom. Remember, if it was a double top, we would just reverse this whole concept. So we have this idea. Now, for me, personally, this is how I like to trade, because I'm a little bit more of I like to be conservative with my entries. If I'm looking for this, I may look for this opportunity here to pull back to this level, and now that would be trigger time for an entry. This is where I would look for a potential entry. If price is breaking out, retesting, that's where it looks best to me. Okay. And this is all theory. We're going to look at an example here in just a moment, but I just wanted to point out this idea of lower highs, lower lows being sort of broken or compromised here, and then looking to get in once we've seen signs of buyers. Because ultimately, that's what we're looking for, right? We're looking for evidence that there is some form of a bigger reversal potentially coming the way of the market that we're looking for. Again, this could be gold, it could be the S&P 500, it could be stocks, whatever you're looking at, Bitcoin, whatever you're looking at. This is the same sort of concept. This is just the idea behind price action. What I like to do in these videos when I talk about price action is sort of incorporate the logic, or at least the idea behind these patterns, so that you can sort of better equip yourself if you look for trades using these ideas. So again, looking for some form of brokenness of the pattern, looking for a break, and then looking for a retest to potentially go long there. Well, where do we go from there? Now that we have the entry, what's next? Well, let me clean this up a little bit here, and let's talk about this. Okay, so we've got this situation. We're looking at this now. This is fully of interest based on the logic that we talked about. And let's say price does come back. This is where things get very, very interesting. You have some options here. Let's say that you did take a long position, and I'm actually going to use the long position here feature on TradingView. Let's say that I did decide to go long here on the retest. Where do we put a target? Where do we put a stop loss? Well, this is sort of going to be up to your personal approach and your personal style, because you may be trading different markets. Bitcoin behaves differently than gold, behaves differently than stocks, behaves differently than Forex. So it's going to be up to you to sort of set what parameters or how you would like to approach this. But this pattern in general gets us a general entry idea, and then it's sort of up to your preferences on how you want to play it. For me, what I would like to do is probably use that previous low as a stop loss. So if price breaks back underneath, if we see this thing just fail and continue lower, then I would go ahead and hop out of that at a loss there, at a reasonable loss. I wouldn't risk too much on it, of course. I would take a small loss should price break underneath the lows, right? That is the idea there. So I'd use the previous low as my barrier and then put a stop loss just below. That's how I would approach it. Then you have some options on the take profit as well. You could go for something like a 3-to-1 like we see here, right? We could go for something much larger. So there's a 2.5-to-1. So I guess actually it would be more like, well, I can't adjust here. Let's just say, you can imagine you could put 3-to-1, you could put 2-to-1. It's up to you. You may want to have a tighter stop loss than this, right? You could go for something, depending on whatever market you're looking at, that would be sort of how you'd like to play it. For me, I can see, myself doing either one, but usually what I'll add in just a second is I'm actually looking for this sort of concept to go long in a broader uptrend. So I may look for structure in the broader sense, right? So what I mean by that is let's say, that this overall, if we scrolled out, we would see, a market that's trending up and then pulling back, right? That's what I'd be looking for. So I'd probably use this low as some form of a barrier for my stop loss. So that's how I would personally approach that. Okay, so now let's look at an actual example. I want to show you guys this concept on gold, which was a huge deal back in March of 2021. So in March of 2021, Price came all the way down. We were trending dramatically to the downside in the context of a super strong long-term uptrend. Price came all the way down here and found support at the 61.8. It was a crazy, crazy bounce. And I wanted to show you guys this because it's such a beautiful example of the perfect double bottom example. So let's look at this. Okay, so remember everything we talked about. We're talking about a market that is pulling back. So what do we see if we look left? Well, we see things like lower highs, lower highs, lower highs, and lower lows, right? And then, so again, just like the pattern we talked about on paper, we can see that this is actually sort of applicable to this market here. You had a series of lower highs and lower lows, and gold was overall very, very bearish until sentiment shifted a bit. And check this out. What do we notice happening right here at 1690, give or take? You can see that we bounced strongly, and then we thought, hey, the price is probably going to continue the pattern, right? We're going to get a lower low, right? That's what markets were probably expecting. But then bang, we actually saw price rally off of the lows and show demand at the exact same level here at 1690. What that showed a lot of traders and a lot of investors here is that, hey, it looks like gold may have actually found a bottom. And that's the whole idea behind this concept of double tops and double bottoms. You have this big trend to the downside where sellers are just in control, and then buyers just step in and say, hey, wait, this is not going any lower. Okay. Now remember, what was the second half of this concept? The second half of this concept was looking for a higher low, right? So this is not going to be picture perfect, but I wanted to show you guys this. So here is the lower low, or sorry, the higher high that we were talking about. You can see price not only formed a double bottom, but we saw the breakout past previous levels of resistance. And this was huge for gold. Yes, we dipped and we pulled back a pretty good bit, but still the embers were lit. Basically, the fire started up, and then we kept going higher. So what I wanted to point out here is that this may have been a beautiful opportunity if you're watching this thing from a double bottom perspective. If you saw the breakout and you saw the pullback here, it's not going to be perfect, but if you had bought into this market looking for a trend continuation play, or at least a full-blown reversal into a new trend, it could have paid out tremendously, because look what ended up happening to gold. You had this multi-month run up to the upside. So, if you're a swing trader like myself, this would be a longer term move. But if you had bought gold here and put a stop just below here, of course, this is hindsight. I know I'm cherry picking a perfect example for a reason, just to show, the scenario or the ideal situation, what we're really looking for here, right? And so, price breaks out, shows that higher high, and then pulls back and continues the uptrend, right? Or at least the new trend that we were seeing. So again, just to reiterate, this is an entire pattern that just shows a new demand coming into a market in what was otherwise a dominant downtrend, right? You're waiting for signs of buyers to step in. Here it was. We saw the double bottom. We saw the breakout, the retest, and there it goes off to the clouds, right? So that's the whole idea behind this. When we are looking at double bottoms and double tops, you're looking for signs of strength. And this is not a foolproof thing. Not every double top or not every double bottom is going to hold the exact same way, and it's not going to be perfect every time. It'd be nice. We could all sit around and make a ton of money together, but the reality is that, trading is difficult. And so this is one thing to add to your toolbox. If you see this sort of pattern when you're doing your price action analysis, this may be of help to you. If it was helpful to you, do me a big favor and hit that like button down below, and also subscribe to my YouTube channel for more free trading content here on YouTube. And with that said, guys, thanks so much for watching. We'll see you back in the next video.